Welcome to Impact Interviews at the IMF World Bank Spring Meetings. I'm Josh Lipsky, Vice President and Chair of International Economics at the Atlantic Council, and I am very pleased to be joined by Adam Minehardt, Head of Public Policy at Chainlink. Adam, welcome.
Thanks so much for having me, Josh.
So I'm excited about this conversation because we get to talk about one of my favorite topics, which is digital assets, tokenization, what's happening both in the US and around the world. I know you work in this space every day. We've been doing this for a long time at the IMF World Bank. Those issues were on the periphery of the IMF World Bank for a long time. Now they are literally, as we sit here, at the heart of the IMF and the World Bank. Tell us first, from your perspective, what's happening in the US on digital assets.
Right now, we're really at an inflection point on a very big legislative package known as the Clarity Act. What it does is, what it would do if enacted, would provide market structure framework for how to regulate digital assets, when they're a security, when they're a commodity, how exchanges and brokers would be regulated by the CFTC and SEC. So it's called a market structure framework, and it's really critical to the industry because there's so much uncertainty as to where these tokens lie, who can trade them, how they trade them, and who oversees them. So it's something the industry desperately needs. From my perspective, I think it's also something that consumers desperately need as well to provide those rails. So right now, that's the ball game in DC. I would say not really secondary, but the Genius Act passed last year, and the regulatory agencies are in the midst of implementing it. The OCC, FDIC, and Treasury have all issued regulations, rulemakings under the Genius Act.
And Genius is about stable coins, for those who are less familiar. And tell us the difference between Genius and Clarity, what's regulated here.
Clarity, really this big picture market structure framework. What's a security? What's a commodity? How are exchanges and brokers really supposed to operate and be regulated? And Genius is really about setting up the framework for stable coins, how they're issued, how they can be redeemed, how they're reserved, how consumers are protected in that process. So really stable coins is Genius, and then much broader market structure issues is Clarity.
Well, why is this taking so long? I mean, digital assets have been around a long time. It seems like it's obvious we need some kind of regulatory clarity, to use the word around it. What are the holdups?
100%. And I think for many very close to us, it feels like a really long time. But as you know, being a citizen of the world, you might say, but these legislative
call me that. Thank you.
these legislative initiatives often take decades to get done.
True.
So I would pause there and just say a lot of frustration in the industry. They want it done quickly, but oftentimes legislation does take many years. The main holdup right now is an issue concerning actually the payment of yield on stablecoins held by exchanges. And there has been a bit of a battle between banks who feel that the payment of yield on stablecoins is akin to a demand deposit account.
This is their purview, and
Exactly. So banks want to restrict it, exchanges want to permit it, and that's really been the fly in the ointment here that's prevented us from moving forward. That's not to say it's the only issue. But it really is an issue between TradFi and the crypto space. So in some areas, we're seeing convergence. I know you talk a lot about payments. In other areas, we're seeing some headbutting. And this would be an area where I think we're seeing more of that sort of headbutting.
It's so interesting for me to have this conversation with you at the IMF and World Bank, which is, I think, considered a pretty conservative, small C institutions, TradFi, in a sense, institutions, even though they're public sector. But more and more over the years, I see crypto companies represented, I see stablecoin companies represented. What is the view when you think of these institutions, the IMF and the World Bank, about these assets when you engage with them?
Great question. I think you're seeing more large crypto firms start to operate like multinational TradFi institutions. And they're really looking at global organizations like the IMF, World Bank, to really looking at them to lead and bring some cross-border consensus around these issues. And a point I know you made about all the different jurisdictions promoting their own regulatory regime for crypto. I think now a lot of these companies are operating multinational, and they're saying, hey, World Bank,
Yeah.
hey, IMF, can you help us get some reciprocity, bring some order
Yes.
to what's becoming a very hard global regulatory regime to navigate.
Right.
It's a new industry. A lot of countries, as you have noted, are regulating it in the way that they think makes sense for them. And I think it puts the World Bank and IMF in a great role to provide some leadership in that area, and also the G20.
No, I fully agree with that. And we have the crypto regulatory tracker, and we look at 70 countries. Folks can look on our website and check it
Yep.
out. This is a problem. This
It
is a
is.
regulatory fragmentation problem, and it cuts against the whole nature of what these assets are supposed to be doing in terms of removing frictions. So hopefully the IMF and the World Bank, as they work on these issues more, can play that role as international standard setter. I think that's an important role for them to do. through their S4.
100%. 100%. I mean, and also like a shout out to the work you're doing, which is really bringing a lot of these companies together, both in TradFi
Yes.
and crypto, to try to get them to speak with a unified voice on this global stage.
Yeah.
Very tough. You have two different sectors with varying degrees of competitive moats, and also a different view of the future. There's convergence in some areas, less so in other, but the need for a global roadmap is critical, and the work you're doing is really important to helping us develop that path.
I'm going to have you on all the time, Adam.
Yeah,
so
no, that's great.
appreciate
I
you
mean,
saying that.
yes, go Atlanta Council.
Let me ask you the thing we hear a lot for people who aren't in this space, which is give me the use case, right? Even folks at the IMF and the World Bank say this to us too. They've come year over
Yeah.
year, but I understand, okay, new technology, interested in that, but how am I using it? What is it changing in my life on a day-to-day versus how I deal with money today?
You're right. And, I've been in the industry now for almost 6 years, and I am often asked that question. And, oftentimes we cite things like cross-border remittances or payments applications.
Something the World Bank cares a lot about on the remittance side.
100%. Or some of these fringe use cases that are coming into play.
Yeah.
My answer now is to all of this is like, where's the there?
Yeah.
I believe it's infrastructure. I believe blockchain technology is a better infrastructure for many operational uses in the financial services world that can result in lower costs, more efficiencies, better consumer reach. So to me, I think the answer is infrastructure, and I would expect a lot of financial institutions, TradFi, to adopt really distributed ledger technology, blockchain technology, to run many of their systems. So to me, it's definitely not as sexy as saying, we're sending money into different countries. Yes, that's a great use case, but to me, it's really about building a new plumbing,
Yeah.
a new infrastructure that's really, really better. It's more efficient and lower cost, and with that, it affords a more efficient deployment of capital, and I think that's what we're starting to see. It's going to take time for this to happen.
And I do see central banks, and we track this as well around the world, they are very interested in DLT. I mean, this is something that has developed over years. There are use cases for it as well, unclear to some of them, but they're exploring it in a way that you wouldn't have thought central banks 5 years ago would even be having that conversation.
Definitely. And I mean, I always like to draw a distinction between crypto and blockchain or DLT.
Yeah.
Crypto to me is the use of blockchain technology in a financial services capacity in some way, where really blockchain is a technology that can be used for financial services. It can be used for a lot of different applications. It's in many ways just a better database. So I think when central banks look at it, obviously there's financial use there, but I think they can look at it as, okay, we have a tech stack to do lots of things. Here's a new technology. Let's look at it. And I think that's what we're seeing. I think they're going to see there's a lot to like there, but there's clearly a lot of questions with the adoption of this.
Well, that's what I want to ask you about the questions, because you do a lot of work in cross-border payments. And of course, there's all the opportunities in cross-border payments and eliminating a lot of the things that make them slow. But there's risk in cross-border payments. We think of sanctions, illicit finance. How, when you're building these new rails, do you make sure there's also guardrails around them?
Definitely. I mean, I think that there's two broad buckets, and I think depending on the technology application, people think about them slightly different. There's sanctions regimes, which I think everyone agrees are not optional, nor should they be.
Right.
And then there's KYC AML. And I would even divide the KYC AML into KYC and AML. And I think the KYC portion of that has become the area where I think a lot of people are understanding what their obligations should be dependent upon their host country's rules and regulations. So I think depending on what KYC, know your customer regime you adopt, I think that to me is really where we're getting a lot of sand in the gears here about how to do this cross-border. One sending country may not mesh well with another country's off-ramping tech, and that could be seen as a way that you could have a lot of illicit finance coming in there. So for me, I think when I think of cross-border, it really comes down to the KYC part of that. I think we all agree on the sanctionings portion being non-optional, but it's really this KYC, how do you adopt it in a way that makes sense globally and in a cross-border framework? So really, really tricky.
One thing we hear a lot from central banks when we talk to them and regulators is right now we have a sort of concentrated cross-border system where most activity happens through SWIFT and CHIPS, where the dollar-based systems and the Western-based systems. We're moving into a world that feels like of more chains, more ways to move money across borders, which has benefits to it, but I think there's some concern about visibility on those chains. Do we know what's happening? How do you think about that from your
I mean, blockchain is not anonymous, it's pseudonymous. So you can be tracked. You can also obscure your identity in many ways by making multiple jumps, using sorts of pools that can conceal your identity to potentially off-ramp. We see this with hacks that we're seeing that are driven by North Korea. So I think the way I think about it now is that the future likely is a global regulatory standard that countries are going to have to come into, be it FATF driven, be it the work at Atlantic Council, be it G20 driven. But I think there's going to have to be a global framework on this KYC AML that people opt into. For these non-TradFi businesses, it's very, very tricky if you are going to have a permissionless open blockchain underpin the transfer of money and not have a sensible regulatory framework for that to operate in. It's going to raise just a lot of red flags.
I mean, this is so much of what animates our work, which is in the absence of doing that, you get a fragmentation, problems in other countries, versus raising the bar, which these institutions, we should all be involved in that work.
Definitely. So. And there is there is a tension between national security and privacy, as you know well. And I think the native crypto OGs very much embrace a libertarian, privacy-forward mindset. So that really runs against a lot of the information required to do national security. So you have a natural ideological battle, I think, going on with the industry and with these sorts of frameworks. So it's a fascinating time to be managing through these things.
Well, the battle will continue to play out. We will watch it closely and try to shape it for the better at the Atlantic Council. Adam, thanks for joining us here at the World Bank.
Thank you so much, Josh. Appreciate you having me on.
And thanks for joining us for Impact Interviews. We'll be back with more from IMF World Bank's spring meetings throughout the week.